some cash flow management. I know I am. But just really briefly, my name is Clara Shook. I'm the event coordinator with the West Business Development Center. And for those who may have missed the last time we were with this group, the West Business Development Center is a nonprofit funded by the Small Business Administration, a federal organization, and we host two centers. We host the Women's Business Center and we host the Small Business Development Center for Mendocino and Lake County. Now, West Center provides free confidential business services such as no-cost one-on-one advising, free webinars and workshops, as well as loan packets and loan advising. And our goal is to provide our free services to small business owners and entrepreneurs during every stage of business development. So whether you're just starting out or you've been in business for many, many years and you're looking to pivot or change up your business or add on, we want to be able to help you do that. I'm going to be putting some of our information into the chat box and links so you can follow up and check out and see how we can help you. So I'm going to pass things off right now to our amazing speakers today. We have Steve and Maria. Please take it away.
Thank you very much, Clara. And thank you again for inviting us back for this session. We're going to be talking about LOBs. LOB stands for line of business. That is usually an extension off of a primary business. And our special guest today is Maria Martinson from Testa Vineyards and from Testa Ranch. And Maria's been in the wine, well, her family's been in the wine industry since 1910. She's been the owner operator for a lot of years. And one day she decided to do an LOB, a bed and breakfast. And that's actually going to be our discussion today about how she did it, and then using a development tool that we use with our clients with regard to a new business idea or looking at what's going on or looking at the future. But the one thing that you want to do with regard to LOBs is if you're looking at multiples, you want to make sure that, especially in a situation like this, what do I have that I can start right now? What is going to take the least amount of traction to get going? And then you start on the next one and on the next one. And as you're building your LOBs, you're also building an infrastructure for the next LOB that's going to take just a little bit more to get done. Some people start at the end and work backwards. That takes a lot of finance, takes a lot of time. When you build it slowly, it's built with the ideology of this is an entire business that I'm doing here, just not a ranch, a farm, a vineyard. This is an all-inclusive business. But I'm going to share my screen and we're going to go into the tool, and then I'm going to talk a little bit, and then Maria's going to talk about how she developed her line of business off her primary. But while I'm doing that, Maria, can you give us some background on Testa Vineyards and where you were when you decided to do this?
Hi, thank you for having me. Love you. I'm Maria. I'm fourth generation to this ranch I'm sitting in the middle of right now, Testa Vineyards. My great grandparents settled here and started the grapes and making wine. The winemaking left for a while and the farming continued. I was the first to come back and make wine again, and we got the winery going in 2009. From there, we have a house on the ranch, so we had, it was rented yearly, and I gave the people notice that we were going to start the winery up again, and they decided it was time to move sooner than I kind of was ready for, but that's what got my brain and my mouth and, you know, trying to figure out what to do. And I got some help from a friend for some ideas, and that's what we're here to talk about today. So I'll tell you more now, or Steve, let me know, like, should I do?
Okay. So I believe all of you have this. And I'm just going to go through this panel by panel real quick. And one of our star performers, they're all here, including Maria up here in the right corner. And we start with the start box. This is a fictitious business here. And what this tool does is we're looking at feasibility, LOB development, LOB expansion, break-even analysis, and of course, a monthly financial review. It can be used for either building a business or evaluating a current business. And then it can be done monthly, quarterly, or annually. Keep in mind that this is a tool that we give our clients, and so there's always an explanation panel going into a work panel. This talks about expenses. What types of expenses do a business have? And we're talking about 3 major expenses, but we only deal with the 2 here: variable expenses and fixed expenses. And the screen talks about the definition of them. COGS expenses, cost of goods sold. This is a worksheet that is put in to define COGS. If you were a hardware store, you wouldn't be using this page. You'd go right in the COGS. I've got these bolts, I've got this lumber, I've got all of these things that goes right in the COGS. But for a business like this, where there are separate elements that have to be put together to be able to sell something, that's what this sheet is for. And in this case, for Big Bob, it's everything that's included to put a night or 2 nights or 3 nights together for his bed and breakfast. And then it comes over here into COGS. And so all of this is basically, it's all broken down here and combined and put into here so that we can actually look at the expenses. Maria, when you were putting everything together, how did you define your cost for operating the bed and breakfast to be able to know what to charge?
So at the time that we started, there weren't a lot going on here in Mendocino County. So I just went by a lower rate, like $200 a night. It's a 3-bedroom. So I figured on what a hotel would cost and marked it down just to get people. And I also analyzed what my yearly rent would have been if I would have kept it a yearly rental at $1,500 a month. Like, I want to be able to make sure I recoup more than that. I had to put in my cost of cleaning, my cost of furnishing, those are long-term costs, but you have to have it supplied and cleaned and taken care of, somebody to check in with. I wasn't actually sure, like, how many of these costs do I include or not include, but it all worked out, so.
Good. And the way that costs are done, they are classified, but they're first evaluated. If it's a cost that you incur when you sell something like a room, then that's a cost of goods sold. If it is a cost you have to pay whether you sold the room or not, that's a fixed cost. That's an overhead expense. So something like garbage collection or internet service or keeping the lights on, any of that, those are just normal everyday overhead costs that have to be paid whether the business is open or not. OpEx, operating expenses, on this tool or on this or on this workbook, a lot of our clients just leave these headers in here. They can be changed. And just so for a frame of reference, if it is a gray shaded cell, it can be edited. If it's not, it is protected. And the reason for that is there are multiple formulas that run through this workbook, if statements, error statements, everything. And so to make sure that the information that goes in is accurate, everything's protected. If it's gray, it can be changed. The one thing we have up here is the payroll expense. And one of the things that is extremely important that most small business operators never do, they never include their labor in the cost of factoring in what does this actually cost me. And what happens with that is when you get large enough and you have to start hiring people, there's not enough money there to pay them. which means you have to increase your cost. And sometimes some people price themselves out of the market. To keep from doing that, what you do is you put in your time and your costs, and you include that in all of your pricing. It doesn't mean you're going to take it home. Most of our clients, what they do, they're living off of line 31 on their Schedule C. So they're taking owner's draws. So what they do then with this money is they put it into a capital account, and it sits there, and they're using it for future growth or whatever they're going to do with it. But it's already built in, it's built in their charges, and they're just reinvesting that money. When they hire someone, it is absolutely transparent to anybody. The rates don't change. The only difference is that money is not going into a capital account. It's going into somebody's pocket, who in turn is bringing labor and service to your business. Maria, what kind of labor functions do you pay for, internal and external?
So labor functions would be the cleaning of the house before and after each day. And of course, with the COVID, we have, extra steps that we do. But the time of management for, who's taking care of the scheduled visits, who's contacting, who's making sure everybody is checked in and checked out, and that sort of thing. So those are labor costs. The making sure that you have fresh linens and all the supplies in the VRBO, I call it, are upkept. You reach out to your community members, bringing in soaps and cheeses and things that you want to represent from your neighbor businesses. That takes time to go get, and keeping track of whatever you do. So that about sums it up.
Okay, thank you. Probably the hardest thing and scariest thing for any business owner to do is the payroll. And what we use in this tool, something very simple. It's from the SCORE Financial Development Workbook that a SBA client would use to start putting a loan together. And this is very, very simple. There's an explanation page, and then year one. And the only thing that's actually filled out in this is how many employees, what they're making per hour, and the hours per week. That's it. That's all that's put in. And when we take this out, we drop back down to zero. And when we put the information back in, we've got our total. We not only have our raw total for what it's costing the business, we also have payroll taxes and everything else involved. And when this is, again, it shows up over here on OpEx, it's first line. And as you can't get rid of it, it's protected, it's brought in, and it's all part of the operating costs of the business. Next thing we have is the pricing sheet. This is all carried over from the COGS worksheet. Our 3 line items, our cost to do it, and then what we're charging for it. Now, one of the biggest problems our clients have is, what do I charge for something? And they look at their competitors. And we should always look at their competitors with regard to what they're doing and what they're charging. But we shouldn't look to them for the way that we should be charging. What if they're wrong? What if they're too high? What if they're too low?
Okay, let me turn this down.
And so we get into a situation where we start tracking our costs, and we start tracking our sales methods the way that large corporations do. They do it by trying to figure out what is the industry margin. And the industry margin for bed and breakfast is 68.3%. And if we put that, if we don't have it in there, we're showing what we're doing here. when we put in an industry margin, now we're seeing what the industry should be. And that gives us an opportunity to evaluate, okay, well, we're pretty close here. Do I want to change my pricing? Well, we're not off that far. It might be something we want to do in January, next January, when the minimum wage increases and we have to increase our pricing because of it. Or we are a business that every 6 months we evaluate our costs and we do adjustments. There's different philosophies. The most important thing is you adopt a policy on it and stick to it. Otherwise, you end up like that business that has not adjusted their pricing for 2 or 3 years and then finds out from their accountant or from doing their taxes, they're broke. They're not making a dime. Every time they sell something, they're losing money. Sales, this is just dropping in what we've done and what it looks like. These numbers again are being carried over from the COGS page. And then we get into financial position. And on the financial position, it's just showing us, this is our sales, this is what it costs for the sales, and this is where we're at. And it brings us to the two most important things that every business owner should know to be able to evaluate their performance and evaluate opportunities or evaluate threats. And that's break-even sales and fixed cost coverage. And break-even sales is very, very simple. Your sales got to a point where you hit break-even. You have paid every single bill that you have, and you have made no profit. It is a goal of any business, any new business, to try to reach break-even within 90 days. Hence the need for operating capital to keep the business going until break-even is hit. And let's say break-even was scheduled for this month on the 31st, and we hit it. That's perfect. Our goal for next month is to hit break-even 2 days before the end of the month. That way, everything we sell on top of that, after we hit break-even, is profit. And we have clients during some of our workshops, they ask, how does a company like Google end up making billions of dollars in profits at the end of the year? Same thing for Amazon. Very simple. Once they hit break even, and they may do it on the 10th of the month, the rest of that month, every sale is pure profit, minus the cost of goods sold. And that's how you see these large profits. They keep their overhead at a certain rate, they pay their overhead off early, and then they just continue to make profit. These two tools here, the management tools broken down. Break-even sales, look, using all their numbers, their break-even was $10,252 in sales. They hit break-even, or it was 24 units. As soon as they sold 24 nights, it was done. Then for the month, they sold a total of 34. So their actual profit was $4,210. And that's what they're paying tax on. And that's another confusion point with some business owners. They think they're paying their income tax on what they sold. No, you're paying income tax on what your profit was. That's it. Fixed cost coverage. This is one of the most important things that you'll know about your business. And it's one of the calculations this tool does, $1.48. And what does that mean? Every time an expense goes up, it costs this business owner $1.48 in sales to stay even. And that is probably the most important thing that any company can know. Large corporations live and die by knowing what their fixed cost coverage is, because they know on January 1st, minimum wage is going to go up $1. What happens to their fixed cost coverage? What do they have to do in sales now in order to break even on that? The other issue with it is what happens. We had a $250 increase in our monthly lease. And because of it, we have to generate an additional $369 in sales. which means we want to book more rooms. And we find out that when we popped in, we were listening to a gentleman talking about a generator. Well, we found out that we need a new generator. We don't have one. We need one. We're seeing power outages more. And so we're finding out that we can get one installed for $12,000. That's great. How much is that going to cost us in sales? $17,700. Now we can take a look at that and we can spread that over. We can add that to our budget and be able to pick that back up by the end of the year. That it's a beautiful budgeting tool to know what's going on. All of this finishes up in a standard profit and loss. And what we do is a side by side. This is what Big Bob is currently doing. If he were to adopt the industry average, it would be over here. And we can see what it would do if we were to change. Our net profit margin would go from 42.6 to 43.5. Now, that doesn't seem like a lot, and it may not be, but it does start to add up year over year. And there are times that we have to bite the bullet on it. January 1 is going to be another time when that happens. Minimum wage goes up $1. And it just doesn't go up for us. It goes up for everybody we buy things from. It goes up for everybody that buys things from us. And so it's one of those situations where we always have to have a way to understand what it's doing to our business. And then the second to last thing I want to show everybody, balance sheet. We talk to a number of lenders every single month, and we have a couple of meetings with them every year. And we always ask them, what are the two things that always really just rip you when you have people coming in and getting a loan? And he goes, well, number one, we can tell if their accountant or CPA put the balance sheet together. How's that? Well, number one, it actually balances. And that's a very, very important thing. You walk in with a balance sheet and it does not balance. There's usually a pretty good reason why. And of course, the big one, and that is the banker says, well, it balances, it's fine. They don't have any profits. If they don't have any profits, how can they get a loan? And what the balance sheet here is for is just explaining what each section does. And in short, a balance sheet, this is showing what you got. And down here, this is showing how you got it. Simple as that. And that's why it should balance. However, when you're looking at short-term debt, current liabilities, when you're looking at credit cards, lines of credit, those all have to be paid within 1 year. That's all short-term. You get a mortgage or you're going to buy a piece of equipment that costs $150,000, that's a long-term loan. Credit cards, lines of credit, that's paid out of monthly operating expenses. The long-term loan, that's paid out of profits. The only part of that loan that is paid out of operating expenses is the interest, which is why if you've ever had an issue with a bank and you've got a long-term loan with them, and they ask you, okay, we understand what's going on, you're going to need a little help. Can you make the interest payments? That's coming out of your operating expense. It's a double-edged question. A, if you can make the interest payments, that's great. They can make their interest payments because they borrowed the money also. But number two, they know on an operating expense standpoint, you're okay. It's just on the profit and you're having issues. The biggest place a business gets in trouble is when they've got a long-term issue going on and they use credit cards and a line of credit to pay for it. They're using short-term money to pay for a long-term issue. And it is the fastest way for somebody to get in trouble, a lot of trouble. And what we do, not to put a plug in for us, but what we do is we help define all of this, put a balance sheet together, find out where somebody is. And if they're not ready, then we help them get ready. We have a number of people that can do that, not only from the financial standpoint, even if you haven't done your books ever and you've been in business for 5 years, that happens all the time. and you need to go out and get a loan where you're going to need to put 3 years of financials together. We can help you do that. You need to put 3 years of taxes together to get a loan. And when you turn around and do these other things, we can help you do that. I want to hand this back to Maria. She just had a major project done up on her property, beautiful driveway and some other things being done. And Maria, if you can go into everything that had to go in, including the permitting, the county dealing with everything, and getting the contractor and all that good stuff, because most of these businesses are going to be going through the same thing.
Okay, we have done quite a few projects here at Testa with making it more comfortable and easier for us to make our wine, take the labor out. And going through the county, we had to get the permitting to do the building we put in, had to be a commercial building. And there's a lot to that as far as where even the building is sitting, what ground it's on. They have to do, check and make sure that all the footings and everything, that the having it architecturally engineered, because potentially we're going to have people in there because it's a commercial building. You have to have your ADA spots and your parking, all of that planned out, the site map. There's a lot of things that you don't think about till you go to them and they're like, here's your list of everything that you need to do. And then you just go down the list and cost you way more money than you planned on because you didn't know you were going to have this or that done. But, they're in it to protect the public, and we go along with it because that's what we have to do. So every project anticipates spending more than, than you originally thought, because there's things that'll come up. And then as far as having, like Steve was saying, like this was a big project. We put this building in, so that's a long-term cost. So you price it out over the years, and is your business going to be able to pay for that? That's where all the tools that Steve was bringing up, you have to know you can pay for this, because you don't want one big project to blow your whole business. So the planning is very important. And what other projects have we done? Same things around here. We put all our profits back into the ranch because this isn't a source of income per se for us. It's more of a historical family project. We're actually looking into getting our land into a historical preserve and being able to have the legacy of my great grandparents continue through the years after we're gone. Like they let you put your plan in order and they help it execute throughout the years, working with your family or whoever is in charge of it. So that's an interesting thing that we're excited about. I can get off track here, Steve. So,
well, Maria, talk about some of the things we were talking about, Harvest Host and whatnot, and what that's been able to do for you. What are some of the other LOBs you've been able to do? You've got the tasting room. You've had some special events up there, and then kind of go into that a little bit. The things that when you first started, these you didn't plan to do a lot of these. They just happened along the way.
Correct. When we started the winery and we knew we wanted to, be able to bring people up to get their wine, taste their wine. We had the house, like I said, was rented yearly. So the people moved out and we're like, okay, we don't really want to rent it yearly again. A friend of mine, Shauna, told me about VRBO. I'd never heard of it before. So I looked into it, and it meant we had to furnish the house, and some things you have to do that to get ready for that and hope that it'll rent, because there wasn't a lot in our area. I didn't really have proof that it would work. but I knew that I had to make a certain amount because my fixed costs were there. And the first year we went above our costs and had an income. Each year after that, it doubled until it tripled. And then, so it was successful. Um, the second thing that has come up just recently from that is during the COVID is called Harvest Host. So they approached me. They said, hey, would you like to be a host? People come onto your property, they're self-contained. And I'm like, yeah, sounds fine. We have an area for that. They can pull right off the road and walk up to do a curbside pickup for wine. At that time, it took about a month till I got my first call and inquired to stay. The people came, stayed. They loved it. They came up. They bought wine. It was before we could do a tasting. Since then, we could now do an outdoor, seating and tasting, and it has raised our wine club. It has raised our wine sales. It's been, as far as costs for me, it's just a person, which has been me or my daughter, taking care of a calendar, making sure that the people are communicated with. Um, as far as rules, we always do the waiver of liability. Where to park, we refer them to our local restaurants. Um, we share about Testa and what's going on here in Mendocino County as far as it used to be events, but as far as where they can get cool stuff or go see cool stuff. And people love it. We have great reviews. When you're going into a line of business, be ready to cater to someone like you would want to be catered to if you were going somewhere. And just a little extra steps of, setting out water and, want the, making them feel special and that you knew they were coming and you prepared for them. You have maybe just a brochure or a sprig of rosemary with it, or, the bottle of water and the cups for them. Just little things go a long ways with making people feel cared for and welcome.
Thank you, Maria.
Leave me, Steve. I don't know. I could just ramble on forever. I love having the vacation rental, and the Harvest House has been spectacular. So,
good.
All good experiences.
I'm going to share my screen again real quick. I'm going to show, let's see here. Okay, there's a notes tab here. This includes several things, some formulas with regard to calculating net profits and whatnot. The other part is if you're new or just starting out or don't feel real comfortable in Excel, there are two extremely good YouTube videos on Excel. Here's links to them. And then these are some general gross profit margins that would go into the pricing tab location up here. And then there's a link here to a master, and it comes out of NYU, and it lists, I can't tell you how many different industries in there. And the whole thing is when you know what your gross profit margin is supposed to be for your industry, now you're getting an idea of what you should be charging. You're starting to see what your costs are going to be. And you just kind of, you get in that sweet spot. The other part is, this is California Wage Act of 2016 that shows what minimum wage is going to be until it sunsets at $15 an hour. There's a tier 1, tier 2. Tier 1, 25 employees or less. Tier 2, 26 employees or more. And what happens in 2024 is everything is indexed, which means that the minimum wage will increase year over year beginning 2024 based on cost of living and the cost of living index. Okay. The last thing I want to talk about, I'll make it real quick so we can get the Q&A, is lending and lenders. If you're going, two very important rules. If you're going to self-finance this, you are the bank. You need to charge yourself interest. You need to make sure you get your money back. If you don't, it becomes a money pit. If you don't have a policy for it, and it doesn't matter what that policy is, it's the discipline of knowing that for every dollar you're bringing in profit, 10 cents, 20 cents, I don't care what it is, has to go back into an account to pay yourselves back. If you don't, it's real easy to get into trouble. And because you're in the habit then of putting money in and not taking money out. And it doesn't have to go away from the company. You can reinvest it back in, but you have to pull it out first to do it. And to put it back in, it's called retained earnings. You're taking money at the end of the year and putting it back into the business. Very simple. Other places to go, crowdfunding. You can go to multiple sites to do some crowdfunding. Very important on crowdfunding. Have somebody help you. We have somebody with us that is extremely good at it. And the first thing he tells somebody who wants to do crowdfunding, okay, this doesn't happen overnight. If you want something out there in 30 days, I hope you're only looking for $5,000 or $6,000 because that's all you'll generate. A good crowdfunding campaign can take up to 6 months. And when you take the time to put it together correctly, well, we had one client recently that was looking for 20,000, and she is well over 80,000 at this point, and continuing to move forward. And that's because it was a great fund put together. It was marketed correctly, going at the right group. And then, of course, the other lenders are your traditional bank lenders or CDFIs. Those are community development finance institutions. We have one here in Ukiah, EDFC. The importance of them, they are given state and federal money to lend out to business owners that they can't get a bank loan. And it's not because of credit or anything else. You walk into a national bank and ask for a loan, they're going to go, oh, okay, not a problem. We'd like to see the tax returns for the last 3 years of your business. Well, if you're a new business, you don't have one. You don't have any tax returns at all. And that's what they are here for, is to help new businesses get established, businesses that are in trouble, to try to get them back on track. And I think that about does it for us, Penny.
Thank you both so much for sharing your information and giving us the example, walking us through the spreadsheet. I don't know about anyone else, but I find it really helpful and useful when I actually get to see something like that in action. So we're going to answer some of the questions that have been coming through the chat box. Again, if anyone has any questions, please let us know in the chat box, and or if you want to turn on your mic and hop in and ask a question that way, that's fine too. I'm just going to get started with some of the questions I've seen coming through. So back when you were sharing the Excel spreadsheet, Steve, we had a question come through. They asked, how does one find their industry in the margin? Would you mind helping us with that question?
Sure. If you've already received this, go to the notes section. And if it's not in there, hit the link to NYU. And it should be in there. If it's not there, Google becomes your best friend. And go in and type in your industry name there and gross profit margin, and you'll find something on it. Now, one of the best things you can do is if you're doing something that has an industry association, they have that information. And sometimes they have it without you having to join it. And if you're doing a bed and breakfast and whatnot, I was doing a little research when I was putting big bobs together, and I talked to Maria about it, and she said, go in and take a look at Airbnb's information. So I went in there, and there was a host of information with regard to somebody who was starting up a B&B. And there's a lot of information out there. When you get ready to pull something in on policy, have at least two sources to verify one against the other. Three is better. It's like building, it's like putting a new building in on your property. You want three bids, and just to see how everything is going to be, but check everything out. But the most important thing is build a policy, have the discipline to stay with it.
Great, thank you. And I suppose, not to plug too much, I suppose this is also the type of thing that you can help people with. Is that correct?
Yes. When we're doing business planning and whatnot with our clients, we give them a list of things to do. We start with what we had back in session 2, the business plan questionnaire. Then it usually goes into a live plan, formal business plan. And we tell them, we need to get your financials for the last 3 years, your personal financials, tax returns, everything. Lenders are very conservative, and they know about money. They know about lending money, and they don't really know about your industry. And so our job is to help explain, here's who you are, this is what you're doing, and this is how the bank or whoever you're borrowing from is going to get their money back.
Great, thank you. Another question that was related to the Excel spreadsheet. So you recommend using the, so do you recommend using the tool separately for each LOB and then cumulatively for the entire business picture?
It's used a couple of ways by our clients. Exactly the way you're talking about. They've got the master copy and they just start making copies of it. And one for each LOB, if you will. Have another client that he makes a copy every single month and drops his financials into it. And that's what he uses to track everything through the P&L. And there's a whole host of ways of using it. And, like I said, it's an introductory tool into the world of finance with regard to your business. And there are much more intricate and complicated units, but you learn what your business is doing with this one. You start learning the concept. So when you're sitting down with the first meeting with your CPA, he's using terms like net profit margin and what's your break even, what is your fixed cost coverage. You know exactly what they're talking about. And not only does he feel confident, hey, I got somebody that knows what's going on, you just saved yourself about 45 minutes of paying a CPA to explain it to you.
Sounds good. Maria, just a quick side question. Now you have multiple different sort of businesses that are working within Testa. Do you use a tool like this? Do you use multiple copies? How do you keep it all straight?
I use QuickBooks, and it has an accounting feature, so I can itemize, where each cost is going, so that we can make sure that we're doing, keeping it all paying for itself.
And in the QuickBooks tool, you're able to keep everything separate, but also see what's doing well, what needs a little love, and go from there.
There's classing that you could do within QuickBooks. So you could class an income, you can class your expenses, and then you could do reports for each class, or test a house, or the different things we do. So
Great, thank you. I'm sure it's helpful to hear how you're doing it sort of in the real world, and then also how with Steve you can get started doing this. Another question. Oh, sorry. Go ahead.
Oh no, I was just going to say, and I forgot to say that. And thank you very much, Maria, for bringing that up. That's the next logical step to go. Is you've got this built out. Now take it into QuickBooks. And now you've got an accounting tool that will also give you month-end reports, including a real balance sheet. And it will actually tell you if you don't balance and what you need to do to fix that. But instead of jumping into QuickBooks cold, you have real world data to start dropping into it and just start running right from there.
Super. We've got another question again, and if there are any more questions after this, please let us know in the chat. This last question was coming through when you were talking about taxes, Steve. So you don't pay income tax on retained earnings, or will you?
That's a CPA question. There are times you do, there are times you don't. There are times you do when you're pulling it right out of profit. And so don't forget that at that bottom line, when you have subtracted all of your expenses and now you have your net profit. There are certain circumstances, and it's tax treatment or something like that, that you can actually do retained earnings as part of your normal operations, and then you go to net profit. But that's a CPA issue, and we don't give legal advice. We don't give tax advice.
But we do work with tax advisors and CPAs.
Yes, we do.
As do all of the SBAs or SBA organizations and host centers, such as the Small Business Development Center and the Women's Business Center. For those who are on the call today, if you're not in Mendocino or Lake County, that's okay. You can contact us anyway, and we will help put you in touch with your local SBDC or WBC, because these are centers all across the continental US. They're in every single county. I guarantee there's one wherever close to you that can assist. I'm going to be putting in, again, just some links from the West Business Development Center for those who are in Mendocino County and or want to reach out to us. Let's see, I'm not seeing any other questions in the chat right now. Any last nuggets of wisdom either one of you would like to share with everyone?
Maria, go ahead. I want to find something real quick. It's a business evaluation that's used by a banker that I'd like to show everybody. I should have had this up before, but I didn't think we'd have the time. But go ahead, Maria.
So making a list of your LOBs and then analyzing them out to see which one you could take on with your current workforce, or you need to bring on more workforce. There are a lot of opportunities out there to have more than one business going and use your same employees or your same, you have that ability. Oh, to me. So, and that's what we did. There's a lot of sources out there that, like, when we started our vacation rental, there's a website that shares that out into the big world called VRBO, HomeAway. There's Airbnb. These places don't charge you until you have bookings. And they put your name out there. They put your pictures out there. They bring people that are looking for, the amenities that we have here in Mendocino. And our county is beautiful. A lot of us have grown up here and we just take for granted our beauty, but get professional photography done for your places. If you don't have a house, there's the Harvest Toast. All these things help sell a product, or one business helps the other business. And the Harvest Host is super easy to do. Having people come and showing them what you do. I had somebody from Harvest Host come here, and they had been over to the fields where they raise rice, and they had the rice that they had bought from the place. So it's pretty cool. Always talk to the people that come and stay. They're a wealth of wisdom. They're out traveling. They'll give you advice, good advice that you need, from well, was everything in our house okay, or where can we improve? Always ask that, because they might say, you know what, it was perfect, top notch, or they might say, hey, everything was great, but if you had this, or making yourself available to these people that are traveling. Either you or somebody has to be available, so you have to consider that. Do you have somebody, or do you want to be that person that's available for these guests? When you bring people into your place, you have to be available for if something comes up, so.
Okay. Real quick, I'd like to show everybody, this is very advanced financial review balance sheet. And this is what your banker is going to be looking at, or investor, crowdfunding, anybody. They're looking at a balance sheet. They're looking at an income statement so they can get into what's called ratio analysis. And to be honest with you, we teach this class. This is the tool from the class. We teach it for a very important reason. It has several issues in here with regard to, you should know what your inventory turnover is, which means that you should know how often your inventory turns over every single year. And what happens with all of this information, the more you know about your business, the better off you are, the more profitable you're going to be. But what a bank will do is they're looking on this, they're looking at 3 years, and then they're looking at the industry comparison. Every single business is sitting in a specific industry. And what they do is they take a look at your annual sales, and let's say it's $1 million. So they pull up every single business they have the financials on that are in your industry that make $1 million. And this is the information they drop in, and you're evaluated against these numbers. And these are all the 50 percentile. And this is a learning tool here for this class, or not for this class, but the class we do. And they're in big trouble. They are probably 6 months away from folding. And this is what we're going through. We're finding out where the problems are. And you can find stuff like this online, your local SBDC. But the whole thing is that the live plan, business plan link that we gave you, it does the same thing for you for your industry. But the most important thing is, when you know where you're supposed to be, you have a goal to go after. And when you do, you know that much more about your business, and you're in that much more of a position to be successful. The last thing I want to leave you with is, every business that starts up, even line of business, you should, during the same time you're thinking about how you're going to start it, how does it end? That's very important. How it ends very often defines how you're going to fund the project. Is this a legacy, like Maria's doing with her family? Is this something I'm just developing so I can sell it? Is this something that I want to do until, this is my retirement? I'm going to keep doing this till I can't do it anymore. So all of those things should be there to help you decide how you're going to fund it. And for a lot of businesses, a lot of small businesses, I want to give it to my kids. And that's great. Sometimes they don't want to do that, but that's okay. They want to go live their own lives and whatnot. And we all deal with that. And I did the same thing to my dad, but then it's kind of like when I was in my 40s, we turn around and say, hey, Pops, you still interested? And we did business for a little bit. But the whole thing is know what this business is going to look like when it's done. And I don't mean when it closes, it's when you're done with it. What does it look like? And one last final thing, real quick. When you sell the business, don't carry the note on it. Have them go get a loan and pay you out, because I tell you what, there's one big secret about selling a business to someone. When you finance it, and if it falls through, when you get it back, it's not going to look anything like what you sold them.
All wonderful bits of wisdom and advice. Thank you both so much. I put the links for West Business Development Center in the chat, as well as a link to our free webinar page. So feel free to head on over there and see if there's anything that interests you. And of course, if there are any topics that you'd like to see a workshop on from us, please feel free to let us know. We're more than happy to accommodate requests. And I'll go ahead and put my email address in the chat box as well. And Penny can give it to you as well if you don't catch it here.
Clara, thank you so much again for all your help with this. Maria, thank you.
Yeah, no, you guys are the star. And
Penny, thank you so much for inviting us.